The content of this podcast is provided for informational and educational purposes only and should not be construed as financial, investment, legal, or tax advice. The views and opinions expressed by the host and any guests are solely their own and do not reflect the views of any employer, firm, or affiliated institution. Any examples or strategies discussed are general in nature and may not be appropriate for your personal circumstances. Always consult a licensed financial advisor or other qualified professional before making any financial decisions. The host and production team assume no liability for any loss or damage resulting from reliance on the information provided in this podcast. How's it going, everybody? Welcome back to Trajecta Talks. I'm your host, Alex Savanovic, and for those of you who are new, I'm an experienced hedge fund trader, and this podcast is all about demystifying the world of finance for you, the next generation of leaders, innovators, and investors. I'm so glad you're here, whether you're listening in your dorm room, maybe you're on your way to class, or just trying to figure out what's next. My goal is to equip you with the knowledge and confidence to build a solid financial foundation and make smarter money decisions. Now, over the past few episodes, we've covered the fundamentals of traditional finance, from the nuances of stocks and bonds to the complexities of derivatives and debt. We've talked a little bit about real estate, some of your more traditional asset classes. Now, today, we're stepping into a new frontier, one that I'm just learning and still learning still, one that has captivated headlines, fueled intense debates, and created both immense wealth and devastating losses. Today, we're going to be talking about crypto. Now, before we get into our discussion on crypto, we had a wild week in the markets. Let's get right to our market update, my favorite part. There was a flurry of headlines that, kept the markets on their toes this week, from new IPOs hitting the scene to geopolitical tensions impacting tech giants and a major new face at the Federal Reserve. We have a lot to unpack this week. Let's start off with IPOs. Syndicate was alive and well this week. A bunch of significant debuts, two that we're going to talk about today. First up was Waterbridge, ticker on that is WBI, an oil field services provider that priced its upsized IPO at $20 per share, which was at the high end of its initial range. Very positive sign to see strong demand for a company in the energy space. Also making its public debut is StubHub. I know many of you have heard of that company. Ticker there is STUB, the online ticket marketplace. It priced its IPO at $23.50 per share, and in its trading debut, its shares were up around 8%, which is a solid performance and shows investor interest in the secondary ticket market. So moving right along, a major story that's been weighing on the tech sector is the news from China. Reports indicate that China's internet regulator has directed major Chinese tech companies like ByteDance and Alibaba to stop purchasing and even cancel existing orders for NVIDIA's AI chips. Now, this is a significant escalation of tensions and a clear move by China to bolster its domestic chip industry. This directive specifically targets the RTX Pro 600D chip, a model that was designed and released by NVIDIA just 2 months ago, specifically for the Chinese market. It was a product meant to navigate the strict US export controls, but now China's pushing back, signaling a clear shift towards building its own self-reliant AI ecosystem. The news has caused a struggle for NVIDIA's stock price, which has been under pressure as investors price in the loss of what is a major market for the company. While some may see this as a short-term blip, the long-term implications are very real, in my opinion, for NVIDIA's business in the region. CEO Jensen Huang recently expressed his disappointment, noting that NVIDIA can only be in service of a market if the country wants us to be. And he has reportedly advised financial analysts to exclude China from their forecasts. This situation highlights the growing and increasingly complex geopolitical risk that global companies, particularly in the tech sector, are facing. Now, as of today's recording, there was actually an announcement that NVIDIA and Intel would be partnering through an investment. I think NVIDIA is making an investment in Intel. NVIDIA's stock price shot up, as well as Intel's, in the pre hours this morning. A little bit of softness in the morning after the open, and then Nvidia sort of recovered. So interesting dynamic there. Now, on the monetary policy front, there's a new member on the Federal Reserve Board. Governor Moran was confirmed by the Senate this week, adding a new voice to the central bank's key decision-making body. He now officially serves as a member of the Federal Reserve Board of Governors. This is a key development that we'll be watching to see how it influences future monetary policy discussions, especially given the events of the week. Now, I edited that last bit because I wrote what I wanted to say for this podcast a day early, but in a move that caught some by surprise, on Wednesday, the Federal Reserve meeting, the central bank voted to cut its key interest rate by a quarter point, a decision, sorry, that was widely anticipated by the markets. What was notable, however, was that newly confirmed Governor Moran was the sole dissenter, voting against the 25 basis point reduction and advocating for a more aggressive 50 basis point cut. This is a fascinating turn of events and quite rare for a new member to immediately break from the consensus. It's also interesting to note that Moran's confirmation came after a period of pressure from the Trump administration on the Fed to lower interest rates to stimulate the economy. Moran's bold vote for a larger cut is certainly indicative of an agenda that aligns closely with the White House's public stance, highlighting the growing political influence on an institution that has traditionally prided itself on its independence. It'll be very interesting to see how this dynamic plays out in the coming meetings. Lastly, a major debate has resurfaced this week regarding corporate transparency. There have been comments from the Trump administration, suggesting a push to potentially end the requirement for public companies to report once a quarter, shifting instead to a semi-annual schedule. The idea is that it would cut costs and allow managers to focus on long term strategy rather than being so tied to a 90-day cycle. Now, when I do the market updates, I tend not to give my own opinion too often unless I feel strongly about something. As far as I'm concerned, I think this is a dumb idea. It fundamentally erodes investor confidence. Quarterly reporting provides us all with a regular, reliable window into a company's health. And without it, there would be significant information gaps, I think, leading to more uncertainty and volatility in the markets. For me, reporting season is also the most fun time of the year because it's when we get the most valuable information. Stocks are moving, there's excitement, there's just a lot of information being thrown at you. And if you're like me, you like to consume that information, learn about some of these companies and what they're doing, who's performing well and who isn't. Moving away from that would be a step in the wrong direction for the transparency and efficiency that our markets are known for. So that wraps up the market update today. There was a lot in there. It was an extremely exciting week. Let's move on to our topic of the day, cryptocurrency. I know the world of cryptocurrency can seem overwhelming. 100%. You hear about Bitcoin, you hear about NFTs, DeFi, a whole lexicon of jargon that can make your head spin. I know it made my head spin for many, many years. But at its core, crypto is built on a few fundamental concepts. Once you understand them, will make everything else make sense. So in this episode, the goal is that we're going to break down the very basics of crypto. We'll start with the foundational technology, the blockchain. We'll then explore Bitcoin as the first and most famous application of that technology, and from there we'll move beyond Bitcoin to see what else is possible with this revolutionary technology, including smart contracts and decentralized applications. Finally, we'll get practical, covering how you can safely get started, perhaps, and more importantly, we'll talk about the risks, the rewards, and the mindset you need to navigate this volatile market. This is the essential beginner's guide to understanding crypto. Let's get right into it. I'm super excited. So part one, we're going to talk the blockchain, and I titled this a digital ledger. So before we can talk about Bitcoin or any other cryptocurrency, we have to understand the technology that powers it all, and that is the blockchain. So let's imagine a shared digital notebook that is replicated across thousands of computers all over the world. Instead of being stored in a central location like a bank server, this ledger is distributed and verified by every computer in the network. This notebook records every single transaction in a secure and verifiable way. Once a page or block is filled with transactions, it is sealed with a unique digital fingerprint and a new page is started. This new page is then permanently and cryptographically linked to the previous one in a continuous chain. So the name blockchain is literally what it is. It's pretty self-explanatory. It's a chain of blocks. Each block is a collection of transaction, and it's cryptographically linked to the one before it using a unique code known as a hash. Think of a hash as an unchangeable digital fingerprint for that block's contents. This is the key to its security. If you were to try and change even a single transaction in a block, the hash would instantly change, breaking the link in the chain and alerting every other computer in the network that something has been tampered with. In order to successfully pull off a fraud, you would have to recalculate the hashes for every single subsequent block, a feat that is computationally infeasible and would require an immense amount of processing power. This simple but powerful design gives the blockchain its three most important characteristics. So, number one, decentralization. There is no single central bank, government, or corporation that controls the blockchain. The digital notebook is spread across a global network of computers. This means no single entity can change the rules, reverse a transaction, or censor who can participate. It's a trustless system because you don't have to trust a third party. The network, through its code and a collective agreement among participants, enforces the rules. This eliminates the single point of failure that exists in traditional financial systems. Second most important characteristic, immutability. Once a transaction is recorded and confirmed in a block, it is permanent. The way the blocks are cryptographically linked ensures that it's virtually impossible to go back and alter a past transaction without breaking the entire chain, which, as we discussed, is something that would be immediately detected by the thousands, if not hundreds of thousands, of computers on the network. This makes it an incredibly secure and reliable ledger of record. Now, the third most important characteristic is transparency. The entire ledger is public and can be viewed by anyone. This means that every transaction that has ever occurred on the blockchain is visible to the public. Now, while the real world identities of the people involved are often hidden behind a cryptographic address, the record of the transaction itself is an open book. This decentralized, immutable, and transparent nature is what makes blockchain technology so revolutionary. It allows for a new type of financial system, one that doesn't rely on intermediaries and can operate globally 24 hours a day, 7 days a week. It also has applications far beyond finance, from supply chain management to digital identity. So now let's move on to part two of our discussion, where we're going to talk about Bitcoin, the original cryptocurrency. So, the very first and still most famous use of blockchain technology is Bitcoin, or some abbreviate it as BTC. Bitcoin was created in 2009 by an anonymous person or group known as Satoshi Nakamoto. The vision was to create a peer to peer electronic cash system that could be sent from one person to another without a financial institution in the middle. It was designed to be a digital currency that is not controlled by any government or central bank, but rather by mathematics and cryptography. So there's a few key things that make Bitcoin unique. There's a limited supply. This is a crucial concept. There will only ever be a maximum of 21 million Bitcoins created. This scarcity is a fundamental part of its value proposition. Unlike traditional currencies, which can be printed by central banks, Bitcoin's supply is fixed and predictable. This has led many to refer to it as digital gold, a long term store of value that is resistant to inflation, perhaps. New Bitcoins are created and transactions are verified through a process called mining. Miners are computers on the network that compete to solve complex cryptographic puzzles. The first one to solve the puzzle gets to add the next block of transactions to the blockchain and is rewarded with a set amount of new Bitcoins. This process is called proof of work, and it is what secures the network. It requires an immense amount of computational power, making it incredibly difficult and expensive for a malicious actor to try and take control of the network. The rate at which new Bitcoins are created is cut in half approximately every 4 years in an event known as a halving. This continues until all 21 million Bitcoins have been mined. This halving is a key part of Bitcoin's monetary policy as it slows the supply and further contributes to its deflationary nature. For many, Bitcoin is a speculative investment, and for others, it's a philosophical stance, a protest against the traditional financial system. But regardless of your view, it's a living, breathing experiment that has proven the incredible power of a decentralized, trustless network. So, part three of our discussion, let's talk beyond Bitcoin, the world of altcoins. While Bitcoin was the first cryptocurrency, it's just one of thousands. Any cryptocurrency other than Bitcoin is often referred to as an altcoin. Many of these altcoins were created to improve upon Bitcoin or to serve an entirely different purpose. The most important of these altcoins is Ethereum. Unlike Bitcoin, which was designed primarily as a store of value and a medium of exchange, Ethereum was built to be a platform for a new generation of decentralized applications. It introduced the concept of smart contracts. So, what is a smart contract? And you might start to think about options because we mentioned contracts back then. A smart contract is an automatically executing agreement with the terms of the contract directly written into lines of code. So, the code controls the execution, and the transactions are transparent and irreversible. Think of it like a vending machine. You put in the money, you press the button, and the machine automatically dispenses your drink without any human intervention. In the same way, a smart contract automatically executes an action when certain conditions are met. For example, a smart contract could be written to automatically release funds to a freelancer once their work has been submitted and approved by both parties. Or it could be used to transfer a digital asset from one person to another when a payment is received. This opens up a world of possibilities for creating new types of financial services, games, and even social networks that don't rely on a central company. So the applications built on the Ethereum blockchain are called dApps or decentralized applications. These range from decentralized finance or DeFi for short, platforms that offer lending and borrowing services without a bank, to decentralized exchanges, DEXs, where you can trade cryptocurrencies without a centralized broker. So, besides Bitcoin and Ethereum, there are thousands of other altcoins, each with a different purpose. You have stable coins, for example. Stable coins, these are designed to minimize the volatility. By being pegged to a stable asset like the US dollar. They are used to quickly move value on the blockchain without being subject to the wild price swings of other cryptocurrencies. You also have things called utility tokens. These provide access to a specific product or service. For example, a file storage project might have a token that users need to pay with to access and store data on the network. You have governance tokens. These give the holders a say in the future direction of a decentralized protocol. The more tokens you hold, the more your vote counts. Understanding these different types is crucial because it helps you look beyond the price and see the real world use case of a given project. Now, part four, we're going to talk about how to get started and a little bit about wallets and exchanges. I just want to kindly remind you, refer to the first 30 seconds of this podcast where I give my disclaimer before I start this part. There's a lot that can go wrong in crypto. So for a beginner, the first practical steps can be daunting, but it's really, as far as I understand it, sort of a straightforward process. You setting up a wallet and using an exchange. It's crucial to grasp that in the world of crypto. You are your own bank, and with that power comes the responsibility of being your own security guard. So, a crypto wallet is not a place where your cryptocurrency is stored. This is a common and frankly dangerous misconception. Your cryptocurrency always lives on the blockchain. Your wallet is simply a tool that holds your private keys, which are the secret cryptographic codes that give you the access to and full control over your crypto on the blockchain. So I want you to think of it like this. Your public key or wallet address is like your email address. You can share it freely with others so they can send you funds, but your private key is like the password to that email account. If someone gets your private key or your password, they can access and take all of your funds. That is why you must never ever share your private key or your seed phrase, which is a series of 12 or 24 words that serves as a human readable backup of your private key, with anyone. If you lose your seed phrase, you could lose your funds forever. So there are two main types of wallets, each with its own trade offs between convenience and security. So you have hot wallets. These wallets are connected to the internet. They can be software wallets on your phone, like Trust Wallet or Exodus, or browser extensions on your computer, like MetaMask. They are convenient for day to day use and interacting with D apps, but because they are online, they are definitely more vulnerable to hacking, phishing, scams, malware. Use these for smaller amounts of cryptocurrency that you actively trade or use. And instead of those types of wallets, you could also use a cold wallet. These are hardware devices that are kept offline, resembling a secure USB drive. They are the most secure way to store cryptocurrency because they are not connected to the internet, making them impervious to online attacks. Cold wallets are ideal for long-term storage of significant amounts of crypto, often referred to as a hodl strategy, as some people call it. I think hodl is hold the dang line or something like that, but they are less convenient for frequent transactions. So a crypto exchange is just a platform where you can buy, sell, and trade cryptocurrencies. Think of it like a digital brokerage for crypto. These centralized exchanges are a user friendly entry point for beginners because they act as an intermediary, simplifying the process of converting between traditional currency like US dollars or Canadian dollars and crypto. When you're first getting started, I highly recommend using a well known regulated exchange like Coinbase or Binance. Although Binance, I think, did have its few issues. I'm not sure if those were straightened out, but I know Coinbase is a trusted one. They have a user friendly interface and robust security measures to protect your funds. While your funds are technically held by the exchange, they offer a simpler and more secure experience for a beginner than managing your own private keys right away. We definitely don't want another FTX situation happening. If you know, you definitely know. And as you gain more experience, you might explore decentralized exchanges, DEXs, like we mentioned before, or you might move your funds to a cold wallet for better security. But for that first step, a reputable centralized exchange is a great place to start, in my opinion. So that sort of wraps up everything that I wanted to say on crypto, cryptocurrencies, Bitcoin, blockchain. It was a very introductory discussion. I didn't want to go into too much depth on any of these topics. I feel like crypto, we've done part one, part two, part three on some other stuff. I feel like crypto is one of those topics where we could do part one to part 10 probably. So, in conclusion, cryptocurrency and the blockchain are not just about making quick money, they are about a fundamental shift in how we think about money, data, and trust. I think understanding this technology is the first step toward being part of a new financial and technological landscape. That's not to say that everything from the last 100 years as it relates to finance is going to go out the window. Those things will continue to be around, but I think crypto will serve an important role in the years to come. So that wraps up all the content for today's pod. So let's get right into our stock picks. Let's talk about Roblox again. So ticker RBLX. Last week, our listener Jason submitted a long position on Monday, September 8th, with an entry price of 128 bucks. Jason, you did a fantastic job. The stock had an incredible run in just a few days. I think climbing all the way to $139. That's a massive return in just a couple of days. So a huge congratulations to Jason. That's a masterclass. Great timing. I think the market had a huge run up in those few days as well. As of this morning, Roblox is pulling back a little bit from those highs, but Jason's entry price is well protected. Great work, and hopefully you took some profits when the price hit 139. Now, this week's submission, we have a new pick from a listener named Gina. Gina submitted a long position on Ionic. The ticker is IONQ on September 17th. Her entry price was 59.26. And Gina, you also have a great eye because the stock has been on a tear today. And at the time of this recording, it's already trading around $64. That's a quick pop and a great start to your position. We'll definitely be checking on that next week. Hope maybe you're at 70. That'd be awesome. We'll be keeping a close eye on both of these picks in the coming days and weeks. Thank you, Jason. Congratulations, Jason, actually. I really do hope that you took profits at that level. And thank you, Gina, for your submissions. We love seeing these real-time market calls. It adds excitement to the podcast, and I love talking about them. So, like I said, that's all for this week's stock picks. Please keep them coming in on all of our social media platforms. We'll be back next week to discuss how Gina's pick is faring. Everyone, keep an eye on Ionic. Folks, that is all the time that we have for today. Thank you so much for joining me on Trajecta Talks. I hope this discussion has given you a clearer, maybe more nuanced understanding of crypto. I know it was just a beginner conversation, but remember, the journey to financial freedom begins with a single step, and that step is knowledge. And we have to include crypto in our financial knowledge given where we're at today. So to stay connected and continue your learning journey, be sure to follow us and our sponsor, Trajecta University. That's Trajecta University. You can find us on Instagram, LinkedIn, and Facebook by searching for Trajecta University. Also, check out our YouTube channel at Trajecta_Talks, where you can watch this episode and find a ton of other great content. All the links are going to be in the show notes down below for you. Join me next time as we continue our conversation about building your financial future. Until then, keep learning, keep investing in yourself, and keep building your future. I hope you all have a fantastic Friday. Take care. I'll see you next time.